Monday, November 1st, 2021, and welcome to the Capital Allocation channel. Today I want to go over the Buffett Indicator, look at where we are in the S&P 500, and take a look at several international markets. Thank you all for watching. Let's get right to it. Okay, so there are several different ways to look at the Buffett Indicator. Here we're looking at the Wilshire 5000 to GDP ratio. As you can see, we're sitting here up at 200%, so we're at all-time highs here. This is called the Buffett Indicator for a reason. Warren Buffett famously measures the market cap to GDP to give a general idea of if stocks are overvalued or undervalued. Based off that analysis, we would have to say here stocks are overvalued. That doesn't necessarily mean they're going down. The Fed has quite a lot of control of where this will go from here, depending on where they put rates, if they're tightening or easing further. But stocks are relatively expensive. Another way of looking at it, the total value of public and private corporate equities to GDP, again, all-time highs. The Dow to GDP ratio, again, all-time highs. And the S&P to GDP, again, all-time highs. So, stocks are definitely overvalued here, although this is skewed due to large cap stocks with super high valuations, the FANG stocks. You can still find value, although you really have to hunt in a market like this. Now, this is U.S. equities. And later in the video, we'll get into some foreign markets. But first, I just wanted to go to a chart to actually look at the S&P 500. Actually, it makes me want to throw up every time we look at all-time highs here lately. We're going almost vertical. This is crazy. I'm not calling for a drop or anything. If you look at Gregory Mannarino's work, he has been the most accurate person I've seen. So check out his work. Definitely, like I said, I don't think this necessarily means it's going to drop. The trend is up, and the trend is your friend until you see otherwise. So, but yeah, this chart just is disgusting. Honestly, it's crazy. Personally, I have not bought stocks. I thought it was overvalued even here before the crash, and I was not even buying then, and I'm definitely not buying now. Of course, I missed this huge gain, but regardless, I refused to buy overvalued stocks, and I was buying foreign equities and mining equities during this dip. But just to look at investor psychology, this diagram here essentially mirrors exactly what we're looking at the S&P here. And this is typical investor sentiment. So you have optimism, excitement, thrill, euphoria. Then it starts to turn over. You have anxiety, denial, fear. And then the crash comes and you really have desperation, panic, capitulation, despondency. And when it trends up, you go into depression, hope, relief, optimism, excitement, thrill, and finally euphoria. And that appears to be where we're at now. So again, not trying to time the market, but just knowing that the Buffett Indicator is showing all-time highs, 200% market cap to GDP. So I'm not touching it personally. Probably will go higher, but I don't like to take those risks. Here's a chart that Jeffrey Gundlach, the bond king, called the chart of the year. So this is just looking at historical market tops. So Japan had peaked in the late 80s, early 90s, came down, has failed to reach all-time highs. Europe peaked right before the housing crisis. Then emerging markets were doing really well up until, Europe peaked before the tech bubble. Emerging markets peaked right before this housing crisis. And here we have U.S. equities outperforming. And so Jeffrey Gundlach's analysis, which I highly respect, essentially suggested that when markets become overextended and outperform for a long period of time, over periods such as a decade, that they tend to underperform the following decade or for a decently long period of time. So again, not calling a top or anything, but just suggesting historically this would appear that U.S. equities would underperform for the next decade. That remains to be seen, but it is interesting, and there are definitely better values in foreign markets at the moment. So speaking of foreign markets, China here, this is the iShares MSCI China ETF. So there's been a lot of bad news coming out of China, and I wonder if this is all smoke and mirrors. We know we've seen Warren Buffett and Charlie Munger buying Alibaba stock, and it makes me wonder, is this a scare tactic? Is this a fear trade to shake people out of the market while people in the know are buying these equities at discounted prices? Because we know China is becoming they are a manufacturing powerhouse. All of the goods that we're getting here in the US coming from China are currently stuck off the coast of California, causing shortages here. So definitely this market is a cheaper market, although still, if you look at the price to earnings and the price to book, still not cheap in the overall market, but I think there is value here. And if you look at these technicals here, we're turning up on the RSI, and we're down near the bottom of this channel here. So is this a short-term bottom? Maybe. Could be a good setup for a trade. So yeah, we will see there. Russia's been doing quite well. Here they're overextended though. They're overbought. They could be due for a pullback down to this EMA. We'll have to see. I expect this will grind higher. The TradingView technical indicator has this as a buy still. We're definitely in a clear uptrend. But Russia's definitely an interesting one. This iShares MSCI Russia has a dividend of about 3.5%, which is not great by any means, but compared to the US, it is much, much higher of a dividend. So iShares MSCI Brazil. This one I'm interested in only because this is cheaper than the other markets. So here the dividend is around 4%. So this is one of the highest dividends that I've seen on any of these country-based ETFs, besides maybe Nigeria. Yeah, those are the two that I've seen that have quite high dividends. Obviously, could be for a reason that maybe these countries have prospects for relatively lower growth. But these are more value plays, and I tend to personally like to buy stocks when they've been hit like this, rather than buying them with a Buffett indicator at all-time highs, market cap to GDP of over 200%. So here we fell out of this channel. We're still in a downtrend, so I personally like to see this turn back up. But historically, we're down near a level of support So this could be interesting. And again, 4% dividend here, relatively higher dividend than many of the other ETFs that I've looked at. So this is something I'm considering. And if there's anything that you all are looking at that you see value in, let me know in the comments. I'm always interested to hear what everyone's thinking. I just wanted to take a look at Blackrock. So the ETFs, which I was just going over, are all iShares Blackrock ETFs. It's unfortunate they do have the most options, from what I can tell, BlackRock and Vanguard. But I really prefer not to support them if I can, and it's difficult though to find other quality ETFs that are not BlackRock and Vanguard. Hopefully we'll see these come up soon, because yeah, you can see who's benefited in the last, well, since 2020. Their stock price went from 580 to 936. So they're doing quite well. Buying up a lot of real estate where everyone else is kind of struggling. So this is really not my favorite thing to see. And again, that's why I hate to support these ETFs. It's difficult to find a place to put your money at the moment. But just from a different perspective, the gold chart is really insane. I mean, this is a massive cup and handle. This is textbook. Still downtrending though. We're in a little bit of a falling wedge, but we're right near this 20 EMA and right near the top of this wedge. So it's hard to say when this will or won't break out. Again, this may be a little bit crowded out by cryptos at the moment, but we will see if regulation comes down on cryptos or if anything happens. But personally, right now, I feel the most comfortable personally holding gold and real estate. I do hold some equities, but gold seems attractive at the moment, giving this massive pattern and given the monetary injections which we're seeing now. So yeah, tell me what you all think. I'm looking at this from an overall risk management perspective, but I do like to find good trades. So I'm going to try to bring those to you as I see fit. And I appreciate everyone's time. Thank you for watching. Hope you all are having a fantastic day, and I will see you in the next one.